Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles and Twitter feed. So our market continues to wobble. We're trying to get some direction established, but this week everything was up for the most part, but we haven't really got firm direction. And so one of the best performing groups right now is real estate. Not necessarily this week, but lots of stuff with high scooter rankings. So we're going to talk a little bit about that. And if you wanted to go look at that, how you would set that up. And then we're going to jump into retail because it's had a banner week up about 6%. And if you're trying to follow me on the schedule, the Schnell schedule flying around, I'm in San Francisco at the TSA ASF meeting at Golden Gate University on September 14th, and you can go to that website and track it down. There's some other good speakers there. Craig Johnson from Piper Jaffray as an example. For the CMT Association meeting in Minneapolis on September 17th, I'll be at that one. And then at the Toronto Money Show on September 2021, if you can catch me there, that'd be great. Anyway, so that's kind of some of the speaking coming up over the next month. So I just thought I'd share those. If anybody was going to be around, please come out and say hello. Now let's jump into some of the market moves here. So we've got Mr. Powell speaking as I'm speaking, I think. And the main issue here is we've got the Fed meeting going on. And while the Fed meeting, or the Jackson Hole meeting going on. And while that Jackson Hole meeting is there, I think Mario Draghi didn't choose to come. And I think Europe is one of the bigger ones that might need to be there. And I don't think Kuroda came from Japan either. So we have some world influence there, but I think Europe must be in the middle of planning some stimulus because their charts are looking quite weak at this point in time. Now, never doubt that the Fed will jump to do that. I think, just crazily enough, nobody cares about debt anymore. So as long as the world just keeps inflating, I guess it all works out okay. Anyway, what we have here is, the market's mostly dribbling red here. The S&P down 0.2%, nothing big. Looking across the main movers, we can see all the big names in here, but nothing really shocking us. And more to the point, I think what I'd like to cover off today is I have a list, the top 7 tech names, or not necessarily the top 7, but some important tech names that are currently, I'll call it, on the watch list, just to see what they're doing. And I've got a Chart Watchers article coming out this weekend about this and a few other large setup charts like this. But what you'll see here, Amazon is just trying to hold above its flat 200-day moving average, also trying to hold this uptrend. And today it's just gapped down a little bit, and it's got a small doji here. But you can see the consolidation we've had in August with no real upward direction. Apple has had somewhat of an upward direction, and after coming out with their credit card that you're supposed to polish with a microfiber cloth, it's down a little bit today. That one just seemed to be almost ridiculous. Anyway, Facebook, you can see that this trend line is being tested today, and we might actually close below it. So we'll watch to see which way that goes. The point in covering these off is you can see that these charts are getting, most of them are sitting right on their trend lines. And so we're trying to figure out if they can hold up. But I think if this as a group starts to break down again, we've probably got more like September, October time frame where all of these charts started to break. And you can see they broke at different times here. But here's Google trying to hold this 1180 level. Just keep watching it. So we had a huge gap down, then a huge gap up. And, in general, we're building this trend line, but pretty much right in the middle of the chart range. Netflix isn't trending higher, trending lower. And so just doesn't mean anything that bad for the stock. I think the important thing is that what had been a pretty steady performer since last September hasn't done anything. And is now, near the bottom of the range, not the top. Microsoft is still holding this uptrend line, and I've placed it here again on these two lines I think these are the charts to watch. And if they start to break down as a group next week, that would be telling me that something's going to start to roll over. Adobe, we also see this one sitting right on a trend line. And, it's not shocking that they all have a trend line that they can follow, or most of them have a trend line. I think the bigger issue for us is none of them seem to really have the thrust or inertia to go higher. So with that, I was trying to look around and find, what is working. And on Wednesday, we called it the Church of What Is Working Now, to copy a phrase from Mark Haynes on CNBC a long time ago. And his point would be everybody who came on the TV was talking about what was working now, not what was working in the future, or what would be a nice setup for the future. And so here we are, just looking at the different industry groups, and you can see a scooter ranking for discretionary at 80, at retail 5, technology still high, utilities way up here at 96, real estate at 96, and staples down here at 94. So, just standing back, looking forward, what's working, and staples, real estate, utilities are the top 3. That makes a pretty good story in terms of, what's working. And so while the sort order might not work perfectly for this week, I think it clearly tells us where we are. Now, technology and semiconductors aren't that far behind. I think there's still some charts in there worth watching, but I think the problem is if those big names break down, then we're going to have trouble. And it was funny. I've been out doing some hiking and golfing, and one of the things was, we see these wild turkeys, and they all kind of just gently wander the same way, and I couldn't help but think that's what the market is doing here, just kind of gently wandering somewhere. We don't really have a clear direction because we're waiting for either the Fed to get on board with what the bond market thinks the interest rate policy should be, or the Fed to talk enough to change the bond market's opinion of what the interest rate should be. And so we're sitting here in this kind of flux mode. And I think Steve Leisman said, I've been doing this a long time, and I don't remember the market and the Fed being so far apart before. And I'm pretty sure he said that when we were going up and the market had stopped going up. And but anyway, the problem we have is that the two are out of sync right now. And until they get into sync, that's the bigger issue. We also have the situation where with the Fed, trying to change the interest rate curve. And again, we've got so much negative yielding debt right now that as we try to change this curve, a lot of people think if the curve normalizes, we're better off. And I covered that off about a week ago. But when the curve normalizes, that's usually when the market is in full-blown correction mode. So be careful what we wish for, because that would kind of accelerate the downside. Now, energy had a really big slide, and we talked about it on Wednesday as being, just how to go looking in there for some of the stuff that's, ready to break out or could be forming a base or whatever. I still think as the market changes here, we want to be watching for that. But clearly, the market is hovering up around the top here. These scooter rankings are telling you where to look. And so to do that, an easy way for people to just, if you don't have a real estate list, you would literally go into the dashboard. This is so easy to do. So we're going to go into the dashboard, and we're going to grab select a scan, and we're going to pick new scan. And on here, we're going to go down to the bottom, and we're going to pick choose U.S. sectors, and we're actually just going to go pick the real estate sector. And I'm looking, there we go. And so when you click on the header, you're going to get everything in there. When we do that, we get 200 and some companies. So we look up here, so type of stock, we just wanted to have some volume, and real estate sector, we run the scan. And looking for my scan results here. There we go. Just a second. And so we've got 235. And one of the things to realize on these real estates is they're all in the small cap group. So even within this group, we're not going to get a whole bunch of large companies. There's a few in here, but I think you can also sort by the different types of REITs and maybe go in and just see if there's anything. But when I'm looking through these hotel and lodging ones, they aren't the ones with the high scooter ranking, so I probably don't want to focus my efforts there. This diversified REITs, these ones are holding up pretty nicely, and if we look at the scooter rankings, that looks a lot better to me. Now, under the industrial office REITs, these are coming up just sorted alphabetically, I think. So I've sorted them on this. I'm not sure what the second sort order is right now. But when we look at these industrial and office REITs, what we see is, there's an 87 in here, and 94 in here, and 87. These are nicer places to look. And when we go look at these charts, whatever, I've never seen this company. I don't know this company. But that chart's just trending nice. And look at it, it's at a scooter ranking for the last year. This was a $90 stock in October, November, and now it's 125. So you're up 30-some% over what's been a relatively flat market. So with the sort orders on the scooter ranking, you can quickly grab this stuff. And again, one of the things that I think is more important it is using the sort features to try and line up the ones specifically that you want. So again, when you see this or when you get your sort back, you might not see all the columns, and so you just need to pick which columns you want to show, and then once you've got all of the columns, then you can work with it. Now, you can always put it into a new chart list. And by doing that, and I've already done that over here, but when I think I grabbed the wrong one. Looking across my headers, maybe I missed it. Okay, so let me just go grab it. Here's real estate sector. And again, once you get it into this, now you can sort it on a whole bunch of different things. So you can sort it on scooter. You could do, what's 1 month performance for these, and then change the sort order there. And then you would go and change these column sorts at the front. And for people who don't know how to do that, you would click on edit, go down to the bottom, and at the bottom here, you want to select all the charts, and we want to remove these numbers out of the front. I'm trying to make sure I repeat this often so people remember how to do this, but it's very simple, and it's a great way to manipulate the data so that you can get it in the sort order you want at any given time. So once you have the chart list established, you just keep resorting. And this has taken a few seconds here just because it's a relatively large file. Maybe what we'll do here is we'll take a quick break. We'll go to commercial and we'll come right back. And when we come back, I want to talk specifically about the rest of the real estate group, and then move into the retail group and just look at some of the stuff that's been working this week.
Missed the live show? Want to rewatch a workshop? Tune into the StockCharts TV YouTube channel to catch up on the latest programming and content. All of our live shows, workshops, special guests, and more can be found there. Each category has its own playlist, so it's easy to locate. We even have chart school and creative strategy videos to help you become a better technical trader. Leave comments for our commentators, like your favorite videos, and don't forget to subscribe to our YouTube channel.
So we're back, and we've got the real estate sector setting up here. And again, now we have no numbers on the front of this, and we need to go back to summary mode. And in summary mode, the reason we got to go there is because that's where we can change what we're ranking by. So in this case, if we wanted to find all of the best performing REITs over the last month, we can sort based on this change order. We could find the worst ones and see if they're going to start to improve, whatever. The whole idea is just to understand how the sort order tool works. We can also do it by the scooter ranking, which we already had up earlier. In this case, I don't have the columns showing with the industry, so I could add that and then be able to see which groups they're in. So if you wanted to have a collection of REITs rather than just one REIT, how would you do that? go through and try and find the stronger ones in each group. And then from this, we're going to go down to the very bottom of the page. So jumping to the bottom, we're going to click number in the same sorted order that we currently have. And again, when we take the sort order and we work with it, the idea is to make it flexible. So, once you've sorted it once, it doesn't mean you have to hang by that. And one of the things you'll find, as an example, when we flip over to the retail ETF, I had Under Armour was one of the top performing ones, a month ago when I looked at it. Well, now it went from being, top 10 to near the bottom. I think it has a scooter ranking of 8 or something. So it's really, what's the right word? It's really fallen out of bed, and there aren't a lot of people happy with the stock, and so it's plummeted. So you're always going to be changing these sort orders, and the only thing that keeping them the same as they were a long time ago does for you is just to see what stopped working more than anything. Okay, so you can see that these have a sort order here attached to them, and now what we want to do is just go into these stocks and start to look at them. And if we just did view all, here's 10 per page. So this is daily. So this one you can clearly see was pretty big downtrend and starting to work its way higher. If you use the full quote box, so as an example, skip over here, go down, and you would tick this full quote box. And if you turn that on, that'll show you the yield up in the top here. In this case, there is no yield. That's interesting. And then what I like to do is I like to have weekly charts. So we would put this up, and then from the weekly chart, we have to change this style for all of the charts in the list. So we're going to apply the style to all. And again, what we're trying to do is make sure we're staying in the stuff that's working right now. So when we looked at the sector groups, which had the strongest scooter rankings, it was clearly some defensive areas. And so now that we're in here, view all, and we've got everything set up so we can see our full quote box at the top with the yield, and then we can just look down through here. This one doesn't have any yield either, and pretty much downtrending and sideways for the last 2 years. That doesn't get me too excited. This one doesn't get me too excited. Here's one that's really smooth, broke out earlier in the year, and it looks like it's just gently climbing up and to the right. And if the market's going to stay in the defensive posture, then this is probably going to be okay. Now, the one thing that has happened is a lot of these REITs have moved up while interest rate levels have dropped. The concern we might have is when the opposite happens, when if interest rates start to rise, and let's just say they stayed sideways for a change, if they stayed sideways, then these REITs could keep performing. If we start to see interest rates actually rise up, then we might see these REITs all put in a rollover. And so that's one of the things. You still need to ride the train until the train stops. But, we've got nice moves on some of these charts. And then what you want to do is just stay with them as long as they're working. And if they stop working, then you want to get out. So here's one, Investors Real Estate Trust, 4% dividend, pays it quarterly, so roughly 1% every quarter. And it's breaking out to higher highs. And this is roughly a 10% move over the last 3 weeks. And you can keep working through these charts. So the only reason I, again, bring you into something probably not as often talked about is to show you how to quickly sort. So we went and got all of the real estate sector holdings that had some volume attached to them, shares trading in 40,000 per day level on average, and then putting those into a chart list, sorting the chart list so that we can see which the top performing ones are. Now, again, we could go to the bottom of this list and we could look and see what's beaten up, and perhaps there's some that are starting to set up with a PPO buy signal or a full stochastic starting to break out of this group. But once we have it in a group, then we can sort on that, and we can use that to help point us to the Mark Haynes line, the church of what's working lately. And we can see, stuff that's starting to improve. Again, looking at the bottom here, all of these would have been PPO buy signals, but again, probably isn't something you wanted to enter. I find usually it's better when these trend lines break in terms of the PPO and you're changing momentum, and then all of a sudden it pushes back above zero here. This is a pretty nice place. Now that still sounds easy, but look over here, and it broke above and then pulled back. And again, at least you're in a REIT and it's paying you something to hold it. There was a long period of move here, and then it broke that upsloping trend line. So just use momentum to help see if there's some change. In this case, it's really starting to outperform in the last couple of weeks. And as long as it's outperforming the S&P 500, you're probably going to be doing just fine. So anyway, as we look through this one, SBA Communications, this has just been a rocket from 180 to 260. Doesn't pay any sort of yield, but pretty nice move. Anyway, let's go to the bottom of the list quickly and look over here and just see if there's anything, in the bombed out sector that we want to look at. The one thing that I will say is when we get a low scooter ranking that's starting to improve, we can sort on that. So a scooter was below 30 and has moved above 30. Maybe, use some of those to help guide you. Okay, so I've talked a little bit about it just because it's defensive and normally it's off the beaten track, and hopefully that gives you some tools to work with. But now we want to go into that retail sector. And again, Target had a big week. So when we look at this in the summary mode, the reason Cody came up first is at one point in time, Cody was the best performer. And here's my Under Armour down here. Where are we? This one, all of a sudden, so it's at 14 now. And here's the other Under Armour, and I still don't understand why they have two tickers. But 7.8 on this scooter ranking. Now, looking at these different ticker symbols, so based on this sort order, so at one point in time these were pretty good, and what you see here is the number one stock I had has a scooter ranking of 5.8. so it has clearly fallen out of favor since I looked at it, let's just say 2 months ago. And that is the reason to kind of keep sorting, keep working with your list, and make sure, if you're trading a breakout, then you have a reason to get into the trade, but you also need to have an exit, because quite frankly, I think the market is just jogging sideways, looking for direction, and we haven't really got it. I'm expecting these charts to really start to take off to the upside, and until they do, that's a big issue. Now, if we just stay with this sort order rather than jumping around to fix that right now, the point I want to make here is this Cody, this was a nice uptrend. You can see rolled over pretty hard. Here's Avon, and who would have thought that they could jump from $1.30 to $4 this year? But they did, and now it's sitting here trying to hold this $4 level, and I would suggest if it doesn't hold it, I'd probably want out. And here's your PPO trend line, and if that was going to start to break, I'd let somebody else own that. Target, what a move this week from 85 to 105. Clearly hitting it out of the park. And again, just so people understand, one of the things that showed up on the back in 2007, and I'm not saying we're going to 2007, just when we went defensive, what happened was names like Walmart, Target held up better than the overall market. And so as the overall market went down, Walmart was actually up 15% from when the stock market topped in October 2007 to the low on March the 9th. Now, right after that low on March the 9th, Walmart became one of the worst performers for the next year while everybody moved back into growth. So it's a fast-moving world, and when these charts change shapes, then you want to be aware of the chart shape. And if all of a sudden all of these defensive names, even though this is in retail, but all of a sudden the defensive names like Walmart and Target start to become out of favor, then you're going to be looking somewhere else. Well, clearly both Walmart and Target right now are in favor and are doing quite well. Here's LVMH. Beautiful stock. I mean, this is just such a nice uptrend. And again, now we're watching to see if it can bounce out of here and turn higher. Boot Barn, I don't know. The stock's been okay, but really, quite frankly, for the last 5 months, it's kind of gone sideways. It had a recent push up and then pull back. We have a lot less momentum here than we had back here. And I think that's what we're seeing on a lot of these charts is they're all rolled over on the right-hand side. And if they don't start to get some enthusiasm, they're going to start dropping in momentum. So here's the Under Armour breakdown. And again, just started to break out to new 2-year highs. And what does it do? Literally puts in a couple of weeks up there and then gives it all back. Funko, quite clearly this chart's working. And as long as this uptrend holds, I think you want to be involved in the stock. Looks nice, obviously a small cap. Here's Decker's Outdoor. Beautiful uptrend, now breaking, and worth watching, because if we're going to start to see this PPO drop below zero, then that would be a concern. If this can start to turn back higher, that would be much better. So just keep watching. If there's a sector you like, you can use these sort orders to help do it. Now, again, we're sorted on the old sort of what was working. And here's Estee Lauder, great week this week, really popped back up. And, you know, the PPO is up nice and high here. I don't see any reason to lose the stock. We've got an uptrend in relative strength. Scooter ranking staying nice and high. They'll still probably hold up into the Christmas period. I think when we talked about retail last time, I mentioned Lululemon. And this one continues to work higher. It's had a couple of weeks of pullback with everything else. But I think if retail goes on a year-end run, this is going to be one of the names that'll keep going. Okay, let's just go back. So the market's now turned positive. Either Jerome Powell has finished speaking, or we've got some different news coming out that's starting to improve the overall sentiment. I do have some charts lists that I put together that I just want to show people. This is a chart list of just the sectors. And what's nice is to quickly sort on this. Now, you can get the same information through the market summary page on StockCharts, but you can also sort this over different time periods. I find it quite helpful to do that. And when you look, so again, we've been seeing lots of red paint on these weekly chart lists. When we sort here, so for 1 week, we're seeing the gold and silver miners are still doing okay. They've tried to bounce back up. Gold's trying to hold that $1,500 level. Gasoline, very, very out of favor. Marijuana names, they continue to just be dropping. And so I don't see any reason to try and get into the space yet. There's a few names that are worth monitoring there, but not entering yet. Rare earth metals still continue to fall. Natural gas just cannot get a bounce. Lithium, as we're watching these, so I'm looking for some of these charts to start improving, to tell us that the economy, you know, China and the USA are going to get together on some sort of a trade deal, even if it's a pause in pain that we get going, and these charts can start to work their way higher. So with that, with all of the by setting up these chart lists, you can very quickly go in and take a look and see what's working. In this case, the scooter ranking doesn't work because things like WTIC is not a tradable ticker symbol, so it doesn't have a scooter ranking. But USO, the ETF that tracks oil, would have a scooter ranking. So again, these are only available on ticker symbols that you can actively trade. Okay, so again, I think we're sitting here wandering sideways in the markets, and we're waiting for some sort of a breakout. I would suggest watching that tech chart list that I had, and if that starts to fail, the tech chart list would be this Amazon list here. If this breaks down next week, then that would get me more cautious. I did mention last week I thought we'd get some sort of a bounce, and that's what we're into. Thanks for taking the time to join me on Market Buzz. Market Buzz airs live Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 Pacific time on StockCharts TV.